Sayona Mining Limited on the ASX SYA and the OTC market in the United States is SYAXF, is a lithium producer chasing tier one assets on the exploration side. And joining me to talk about the quarterly results is Managing Director Lucas Dow. Hello, Lucas.
Hi, Tim. Great to be with you.
It's great to see you again. Now, it's been 3 months since we last spoke at the last quarterly, and recently Rio Tinto has acquired a lithium project, Arcadium lithium project. But before we talk about that, let's just go through the key highlights for your operations over the last quarter.
Thanks, Tim. Obviously, had a busy quarter and also really quite a productive one where we've really seen the broad range of key metrics move in the right direction for us. So if I just sort of step through operationally, we saw mining volumes at around 240,000 tonnes, so up 3% quarter on quarter. We saw increased mill utilisation. That was up from 83% to 91% through the quarter as well. So we saw increased mill utilisation. Recovery was at 67%, which was a reflection of some lower grade feed that we saw during the quarter. But ultimately, all of this combined for us to be able to produce a record quarterly production spodumene concentrate level at just over 52,000 tonnes, which was obviously a 5% increase from the previous quarter. And again, at a record level, it's a real testament to the work of Sylvain and the team in Quebec. So that's really got us off onto a great footing. Obviously, the impact of that increased volume has been a reduction in our unit operating cost. On a cost of goods sold basis, we were just a touch over $1,300 Australian. And if I look at that on a unit cost of production on a tonnes produced basis and stripping out inventories, we're actually sub 1,100 Australian. So we've seen a significant reduction. So that's respectively, it's 11% and a 15% reduction on those unit operating costs on a cost sold and then a tonnes produced basis. So things are certainly moving in the right direction in that space. In addition, we saw shipping volumes increase significantly to 49,000 tonnes for the quarter, which was a significant uplift from where we've been previously. And importantly, one of those shipments went out as a 35,000 tonne bundle, which again has allowed us to be able to reduce our freight costs, as we described earlier, in the order of around $50 US a tonne. So a really strong operational quarter, and we're looking forward to being able to continue to drive that. We've still got plenty more work to do, but importantly, we're reaffirming our full year guidance.
I remember last time we spoke 3 months ago, there was a bottleneck in the shipping process. So your revenue is significantly higher this quarter. Was that shipping bottleneck part of that reason for the increase?
Well, Tim, we'd actually structured a number of our shipping arrangements so that we could club cargoes together. So we've actually held a couple of cargoes back. We saw revenue up 52 million, up to $52 million this quarter, which was double the previous quarter, which was a reflection of both increased shipping volumes and importantly, our realised selling price was just a touch over 1,060 Australian, which was up 21% quarter on quarter. As people would appreciate in a declining market, that's a pretty reasonable result. So we've seen improved commercial and shipping arrangements having a clear and positive impact across the bottom line for NAL and then ultimately Sayona.
What is the outlook for sales and pricing for the lithium product? You just mentioned that lithium price is declining, but do you see that changing? So what are in terms of going forward, changing in pricing and sales?
Yeah, Tim, it probably goes a little bit to sort of, what your earlier comment around sort of the outlook and what we might think about the Rio and acquisition of Arcadium and so forth. I think generally people feel like the price has bottomed. We've seen production cuts coming out of both China and Africa. So there is some supply coming out of the market, which has obviously provided a bit of stability in terms of a price floor. Interestingly enough, the forward curve still in contango, and that's also providing us with some opportunity to be able to provide some downside protection by taking a conservative approach to some hedging. So in short, as we're continuing to drive our unit costs down and being able to lock in some of those increased margins on a forward curve basis, we certainly think that we'll be in a good position to be at cash break even, if not generating positive cash by year end.
Well, there's no question that you're going to be expanding your production capability, but how are you going to maintain your operational efficiency and cost reductions in context of increased production?
Yeah, so Tim, obviously we've seen our unit operating costs on a tonnes produced basis down 15% quarter on quarter. That's been a combination of both absolute cost reduction, so that's being able to take out those inefficiencies, but also drive further efficiencies in relation to our mining, our processing, and our logistics processes. So there's contract renegotiations going on, but in practical terms, we've shortened the haulage route for the waste profile in the mine. So that's obviously having immediate impacts in terms of the amount of truck hours we've got to expend to be able to move the waste. So there's elements there. We've introduced a jaw crusher as well to be able to improve the crushing circuits availability and ensuring that we get better flow through that crushing circuit. In addition to that, the crushed ore dome is really paying dividends. And as I described at the top of our conversation, we've seen mill utilisation increase from 83% to 91%. And that's very much happened on the back of the crushed ore dome creating that buffer in between the crushing circuit and the milling circuit. So it's really on the back of those sort of initiatives that we're going to continue to drive our unit costs down. And again, that's what's going to allow us to be able to deliver on our full year guidance of on our cost basis sitting between 1150 and 1300 Australian on a tonne sold basis.
On that number, you mentioned before $1,100 cost. Is that an all-in sustaining cost production?
So Tim, that's our unit operating cost for tonnes produced basis. So it excludes some inventory movement. So aside from that, we've got $20 million in sustaining capital to be deployed this year. That's in line with guidance. The first quarter's seen us spend around $7 million of that. The reason for that is that given the weather and we need to be able to get construction activities completed ahead of winter, that tailings dam raising has occurred. So that's obviously it's a little front end loaded, but certainly we're reiterating our guidance around capital expenditure for the full year.
Okay, being a explorer for new assets or developing existing assets as well as being a producer, how is the mineral resource assessments for NAL and Moblan going to influence your future exploration and development plans?
Yeah, so Tim, during the quarter, and I think it was back in August that we actually had released increased resource estimates for both Moblan and for NAL. Importantly, they're quite significant. The reality is that NAL now has really increased the resource base to a significant extent, such to the point that we've really now got the opportunity to study in depth the prospect of being able to expand NAL in a significant way. Now, obviously, as I've reiterated previously, we've got the offtake arrangement with Piedmont. We need to be able to work our way through that. We're not going to fund 75% of the capital for 50% of the offtake. But NAL now presents itself, given the size of the resource base and importantly, the amount of resource that's in the measured and indicated, we've got a high degree of confidence to be able to move forward and really be able to drive NAL optionality in relation to expansion and clearly or an extended mine life. So there's a real opportunity for us there. Moblan just continues to surprise on the upside, again, approaching 100 million tonnes of resource on a 100% basis. That's a world-class deposit, a real opportunity to be a very low-cost greenfield spodumene concentrate producer. And importantly, given that we're located at the southern end of that James Bay region, we've got some real competitive advantages in relation to infrastructure and logistics as compared to some of our competitors in that space. So I think really the message is watch this space. We've got some work underway to really understand the potential for NAL and then also how we can go about bringing Moblan into production.
Wow. Now, you've just appointed Laurie Lefcourt for your ESG, and how do you see that recent appointment working for the company?
Yes, so Tim, obviously we've got a strong focus across our ESG and particularly around the governance aspect. I think importantly, let's take a step back. Aside from the operational performance that we've seen around production and cost, we've also seen improved safety, which has been great as well. So again, that's down to the hard work of the team. Laurie's appointment's great. Laurie's been recently appointed another independent non-executive director. Laurie brings a host of experience. She's got a strong financial background in addition to having audit experience as well. So Laurie will actually head up and chair our risk and audit committee. So Laurie's a great addition to the team and we're really pleased to have her on board now.
Now, in the general terms, in the bigger picture, the macro, zooming out a bit, Rio Tinto's acquisition of Arcadium, where is the lithium market going in your view, both short and long term? And what impact will that have on the lithium market with such a big player entering?
Yeah, so I think in short, Rio's acquisition of Arcadium's a real shot in the arm for the sector. I guess what it does underscore is that Rio clearly, like ourselves, believe in the sector long term. I think, everyone's, I don't think there's any debate around forecasts. It's probably just the quantum of how strong they are, whether it's 10% on a compounded annual growth rate, or it's a 15% CAGR for lithium demand as we move forward. So there's a real opportunity there moving forward. And Rio, I think, has underpinned that for the sector. So are we in the right sector? I think, absolutely there's a big tick there. I think it's also indicated, and Rio's been quite vocal about it, that they see this as a multi-decade play rather than a near-term piece. So again, it probably reaffirms Sayona's strategy that, this is a low price environment. We've just be able to get our unit costs down and be able to move through this period so that when prices recover, and they will recover, the real question is when, that we're in a position to be able to take hold of that. I think the other component as well in that Rio's acquisition of Arcadium, it's also another tick for Quebec, and as the only hard rock spodumene produced in North America, and we already hold that advantage of being an incumbent, understanding the way things work in Quebec. So we're again looking to be able to leverage that as we move forward, thinking about the expansion for both NAL and Moblan.
No, it's terrific. It's a terrific position that you're in, Lucas, in not only producing but having a large backing mineral resource coming up upstream behind you and big players like Rio. It looks like we're in for a lithium future. To quote another CEO of another lithium company, it's a lithium future. We've got no choice. Electric vehicles and storage batteries. Um, Lucas, thanks very much for joining us today, and we look forward to the next update.
Great. Thanks, Tim.